let me welcome on board the management of PB Fintech as well. Lots really happening with this one, has been quite on the news. Let's really get some rationales from them and some clarifications as well. Joining me right now, Yashish Dahiya, the Chairman and CEO at PB Fintech, and Alok Bansal, the Co-founder and Executive Vice Chairman at PB Fintech, both on the show right now. Chairman, hi, morning. Good to have you both. Anyone can really take this question because, firstly, want to clarify that the reports which were doing the rounds about PB Fintech getting into healthcare, and you haven't denied these. Can you explain why is it that you're looking at, getting into a totally unrelated space and diversifying? Any of you can take that.
We don't consider this to be totally unrelated, as you mentioned right now. If you look at the whole insurance value chain, obviously there's a risk element to it and there's a claim element to it. And when it comes to claims, the claims are handled at the insurance company level, but also at the level of garage network or the hospital network. So eventually, if you are not able to give a superior experience when a person is going through the claim process, whether it's in garage or in a hospital, the whole customer experience is broken and the trust in the whole claim process also goes down. So the way we look at it, whether it's the risk part where we started the insurance brokerage after getting the license about 6 months back, or whether it's the claim support part, which is the hospital networks or the garage network. These are very well integrated to the whole insurance delivery itself.
All right. Yashish, just to understand, if this were to be the route that you guys take with the foray into healthcare, what essentially is the problem that you're trying to solve? How is it going to help insurers, customers, and of course, what does it bring to the table for PB Fintech?
So let's talk about the insurance industry and specifically the health insurance industry. Today, roughly 4 crore people pay about 10,000 rupees at the beginning of the year to the health insurance industry, saying, whenever I fall sick, whenever I have a disease, you please take care of me. And that's a very big step for these 4 crore people. Now, when they go for the claim, at that time, there is a lack of trust between the insurance world and the hospital world. Please understand that the 40,000 crore rupees, which comes from the 4 crore patients paying 10,000 rupees each, has already been paid to the insurance industry. So today, if nobody falls sick, that is very profitable for the insurance industry. However, if everybody falls sick, the insurance industry has a loss. At the same time, at the point of claim, that is a revenue for the hospital industry. And this is what causes that lack of trust because the incentives are different. The insurance company is asking, was this treatment required? Was this an overstay? Was this an extra room in the hospital? Was this some procedure was carried out which was not required, right? Those are the kind of questions that go through. Now, and obviously, both of them have different financial incentives. So to some extent, it helps if the insurance companies of the insurance industries have a hospital infrastructure available to them, which more aligns with them. And this model is very well proven all over the world. It is called a HMO model.
Right. Yashish, this seems more like, an industry problem and the government should be solving it. Why is it that you want to step in and resolve that?
No, I do agree it is an industry problem. And at an industry level, see, we are a part of the industry. If the customer can have a very good claims experience, and because of that, more people buy insurance or develop trust in insurance and more people buy insurance, then we are also an automatic beneficiary of that. Today, 40,000 crores is the health insurance industry. If in 10 years' time that becomes 4 lakh crores, then obviously PB Fintech is also a very big beneficiary of it. I also want to clarify one thing. This is not our venture. And I think this is a big misunderstanding. It is a minority investment by PB Fintech, which is one time. We will invest between $0 to $100 million. And it is a one-time investment, just like Info Edge invested 20 crore rupees when Policy Bazaar started. If Policy Bazaar failed, Info Edge's loss was limited to 20 crores. And in this case, because a lot of investment actually goes into real estate, even that is not the problem because, as you know, real estate value does not go to zero. If you invest some money in it, most likely it will be there. And there will be other investors alongside Policy Bazaar. So clearly, Policy Bazaar is not the only one solving this problem. There will be more people, whether those are hospital networks, whether those are uh, health insurance companies, whether those are people like development finance institutions, or whether they are venture capitalists. There will be others, and PB Fintech will be, as I said, a minority investor investing between 0 to 100 million, subject to board approval. So we have to understand that that is the risk PB Fintech is taking in this. And of course, as a big beneficiary of this, and the people who thought of this concept in the first place, we think that there is some job that we have to play in making sure this happens.
Yashish, so do you think health insurance companies will actually support this idea and initiative?
Yeah, if the health insurance companies are able to provide to their customers a seamless experience where there is no approval process, no pain at the point of claims, and at the same time also bring down their claims cost. If their customers out of pocket spend at the point of claims comes down, today as a customer, when somebody goes to hospital, suppose the bill is 5 lakh rupees, 3 lakh is settled by the insurance company, 2 lakh they still have to pay. If that 2 lakh can come down, if the claim processing can be simple, and if the overall claims cost to the insurance companies comes down, which HMO model all over the world has brought down cost. So then why will the insurance companies have a problem with that? So please understand, out of their largest cost is claims. Their largest amount of money eventually goes to the hospitals for the treatment. So if that is coming down, which insurance company is going to say, no, I don't want to reduce my cost. I don't want to give my customers a great experience. I want to stay the way it is. It is one of the biggest complaints that the insurance companies have today.
Impact growth and profitability for PB Fintech and in the short term and also in the medium term?
If customer experience is superior, automatically there will be more customers who will be looking to buy health insurance policy to get this peace of mind. The healthcare costs obviously keep on going up, and if there is certainty that you can get claims, plus it can cover for a lot of OPD experiences, it can work with you through your life cycle of starting from preventive to post operations and everything. So it is going to be something which is really, really good from the customer perspective. If more and more customers come to the industry and buy, overall, it helps the industry. And if it helps the industry, it helps PB Fintech or Policybazaar as well. Now, that is one part to it. So growth rates definitely go up. If growth rates go up, your profitability automatically goes up because you are scaling much faster. On the other hand, the money which goes into this venture, that itself can grow with time, and that is the secondary impact of what the profit can be created by this PB Fintech. So overall, the way we look at it, there are two different parts to it. One is the PB Fintech growing faster because the customer trust has improved and more customers are looking to buy these products. The other side is the investment which goes into this venture. That investment itself can grow in value over time.
About the brand impact in case of negative experiences at the hospitals?
Oh, I think, look, what you are, trying to give to customers, and we have in the last 17 years not created negative brand experience for our customers. So if you think about it, our customer satisfaction scores are quite high, and that is one of the reasons why, from a vision perspective, I definitely want to be involved in this side as well. And the reason for that is to make sure the customers have a great experience. The whole idea is to set up a great customer experience. Now, if you are destroying customer experience itself and creating a negative brand image for yourself, I think that is a very remote possibility and something that, we have not been known for in the past. This entire venture is to improve customer experience, not make it deteriorate. And also, it is not a direct linkage of the brands, right? So this venture is not called Policy Bazaar by any stretch of imagination.
Okay, and Yashish, is this an asset-heavy model? Because you've been a very asset-light platform business so far. So doesn't this really change the whole hypothesis and how everyone is going to look at you?
See, I wanted to explain this in two parts. Policy Bazaar is an investor investing between $0 to $100 million. And yes, you can argue it is investing in an asset-heavy model. That does not make Policy Bazaar itself an asset-heavy model. That is less than 1% of our market capitalization is going in this direction. I'm just trying to explain. So yes, if somebody believes that is a very bad idea, then that can be considered as if it's been lost, but that's not our intent, right? And I think the second aspect is, think of a franchise model. If you were to set up a franchise today, how do people do it? When Oyo rooms were set up, first few they would have to do on their own. After that, the franchise model takes off. You cannot expect on day one itself for the franchise model to start working. So this will also in some way go in a franchise model. However, at the initial stage within the national capital region, it has to be a controlled experience where, because you want to give a great customer experience, you have to in some way own the assets. Now, that does not mean PB Fintech is owning the assets. I want to clarify this. Let us, for lack of a better word, call this XYZ company. This XYZ company in the initial 3-4 years owns a lot of its assets.
But you want to build hospitals and own assets? Aren't there enough hospitals already? And there is a lot of capacity currently which is looking unutilized. So why create capacity when there is already existing capacity?
Like any other model which has to work, initially this entity is envisaged that it will own a few assets, let's say in the national capital region, because this can be a limited area trial. And so it may have, let's say, 6 to 8 hospitals in the national capital region, but that will run for 3-4 years. But that is this company, that is not PB Fintech. And I think this confusion needs to be very, very well removed, that it is not PB Fintech which will bring 8 hospitals on its balance sheet. No, PB Fintech is an investor. Just like today, PB Fintech could go and take, let's say, in any of the corporate hospitals, goes and makes $100 million investment. Of course, there is a vision angle, which is taking it in a particular direction, which is taking that HMO in a particular direction to align much more, just like an outsourced partner of the insurance industry. But once that model has been established, this company has its own life. Whether it does an IPO, whether it does a REIT, whatever it does, is its own life.
See, also, if you look at whether it is the hotel industry, whether it is the manufacturing industry, look at Apple. Apple is doing the front-end part of it in terms of designing, in terms of distribution. The manufacturing is done by the vendors or OEMs. Similarly, in hotel industries, even the biggest of the brands, whether it's Marriott of the world, IHG of the world, they would own few hotels at the start, and eventually they'll set up the protocols. And after that, it can be owned by anyone else, but they manage the property. The same happened with Taj Hotels in India. So there's lots and lots of such examples where you don't need to own the asset, but you control the customer experience and you control the protocols and the softer part of the asset management, basically.
All right. Thank you so much, gentlemen, for joining in and giving us all those details as to what that potential foray could mean entering the healthcare space. That's the management of PB Fintech, saying that as of now, it's not a totally unrelated business, and the lack of trust between insurance and hospitals is a gap that they are looking to potentially fill. All right.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.